All right, let's take a look at the markets. Today we closed red across the board. Nothing too crazy, but I'd say more than a -1% day across the board. The S&P, okay, yesterday we had a nice move higher following Powell's speech. Otherwise, what we were doing was retesting the breakout. So market is, I can't say it's technically bearish because it's not. Bullish, maybe a little bit. I mean, I'm fundamentally so bearish that it's very hard for me to utter those words. But as you can see, we are basing still at prior resistance. So we are trying to form support in the S&P around, let's say, 410. So today wasn't that damaging to the bullish technicals. We didn't exactly close below or even venture lower than the last couple of days. So it's kind of, I don't want to say it's an irrelevant day, but it wasn't a decisive day for the bulls or the bears in the S&P, despite it being down 1%. I still think we're going to visit this ascending line because I think it's ridiculous to be this high up and the fundamentals are bad. And I do feel like the momentum is changing in the markets. So, but anyway, that's the S&P. You got to look at the other ones. Let's look at the Nasdaq. I mean, it's a little weaker, you could say, because we closed lower, but still, we didn't touch the last 2 days low of day or close below it. And to be honest, we're actually basing higher, relatively speaking. So the Nasdaq, I'm not going to say it's bearish, technically same as the S&P. You know, I'm fundamentally bearish, and it wouldn't surprise me if we not just ventured below 300 and test prior resistance, let's call it 296-ish, but even go lower. But you know, the case is not there yet. I don't see many catalysts around the corner. I mean, there's always news every day. I think tomorrow we have some, I think some sentiment or some no initial jobless claims. I mean, that will move the market. Every day you kind of have news now. So I don't really think it's the news that's going to drive. It'll act as a catalyst for what otherwise would have happened technically. So I'm really going to stick to just technicals. But again, fundamentally, I'm very bearish, and fundamentals eventually win over. I mean, the technicals will eventually match the fundamentals long term. Dow Jones weaker than the S&P and the Nasdaq. That's still the case. So we've never really closed above this descending line. You could maybe say yesterday, but a bit of an anomaly following the Powell speech. You know, we're still within the descending, below the descending line. So for me, again, I do feel like the Dow will venture down here towards its low 33,000s. And if we do have a move lower across the markets around that point, then I think it's the Dow that will lead the way down. So, but anyway, nothing too crazy to speak of. You really want to see, you know, the Dow Jones start to move below this area, you know, closing there or just touching around that area. Then we sort of cleared the last couple of low of days. So that would be nice. But again, where would the Nasdaq be? You know, it'd probably be testing its prior resistance. So Russell 2000, same sort of thing. You know, I do expect it to come back down to test its prior resistance. So yeah, I can't say that I'm too bearish technically speaking, but I do think we're going to move lower. So that's the general markets. The VIX, that on the other hand, and you're starting to see the VIX sort of outperforming a little bit. You know, it's always been underperforming, weak. I mean, you just sell the VIX at any moment, you're going to make money. But now I just feel like, you know, up 5%, that's pretty good. Given the markets were sort of down one, just more than 1%. I just feel like we're going to have a bit of a spike in the VIX now because we've closed above this descending line for the first time in a long time. So you could have a bit of a spike, and that would be really good for a nice flush in the markets. Those are the markets. Let's look at the dollar and interest rates because I think those are the things that will lead the markets in a particular direction, namely lower. Let's start with the rates, which is probably the most important thing, actually. The 1 year is now basing above this resistance. So if we have a bit of a base here and we go sideways and we don't really venture lower, I mean, we can venture maybe a bit lower, but you know, down here, I don't think we're going to visit this area here. If we sort of base around here, and then we could easily just pop up and take out this last high, which I don't even think counts much. The point is, we're going to make new highs, if you know what I mean, in the 1 year. The 2 year, which is the most important one, that would equate to the same thing happening here. So basing, going sideways, and then up. And if we go up above here, we're going in 1 or 2 days straight to the highs. And that means total chaos for the markets. That means the market's going lower. That means the dollar going higher. That means commodities going lower. And this is just 2 or 3 days away, a massive move like this. So, that would also coincide with a VIX move. So watch out for some surprise squeeze up in rates and volatility and market down and all that stuff. Maybe some geopolitical event. You never know. Look what happened in Turkey. I mean, that was just totally saddening stuff. But, out of the blue, just 11,000 people die. And something like this can happen. It's just a black swan. 5 year, yeah, I mean, same thing. It would venture higher, but it would find resistance quicker because still haven't cleared this horizontal line. 10 year, pretty much exactly the same thing as the 5 year. I do expect still hasn't really closed above this descending line. But the 10 year is very, very important. Remember, the 10 and the 2, it's all about the 10 and the 2. But the 5 year has closed above, just to go back to the 5 year. The 30 year, yeah, it's a little low. I mean, it just gets more and more delayed the further out you get. But I think if you start to get a move in all the rest of the yields, you can see this one close above the descending and basically follow suit. The EU 10 year, look at that, just keeps creeping up. We've now taken out this sort of range here. So for the second day, we've closed above it. This takes 1 or 2 days. This takes 1 or 2 days. And then I don't know how you can have the DAX all the way up where it is with EU yields testing their highs. One of them's wrong. And I think it's the DAX. I don't care if inflation is priced into the DAX. I just feel like the DAX has to come down if we start to move higher. I mean, this is just extraordinary stuff. And, this has real effects. So short term across the continent, I don't know. I just feel like it's the yields. I look at these markets, the S&P, the Nasdaq, they're still a little bit bullish, even though the fundamentals are horrible. But this here could just pop the whole party, to be honest. The EU yields before the US yields. Anyway, that's yields. Keep an eye on that every day. Every day. Let's look at the currencies. Yeah, the dollar's doing exactly what I thought. So we touched this 103.5, I think it is. I can remove these targets now. They're all hit. This one here, you could say it's also a hit because look, it was the next day and it comes a bit lower because it's a descending line, basically touched it and then closed at 103.5. So you can tell these were completely correct, these targets, which I've now removed, the 103.5 and the one just above on the descending. And now we're basically basing at 103.5. So it's a bit like those yields that have cleared their resistance. Here, the dollar has tried to suggest that it's reclaimed 103.5. It's just chilling, basing, going to go sideways. And very, very soon, it's either going to have to break out of this and, test 105, 106, or revisit the lows. And at that point, this white line kind of becomes irrelevant. The lows, if it does go lower, it's going to have to test 100. 100 point, whatever this low is, 0.8. I actually think it's going to go up, so I'm not too concerned in getting the exact number here. I think we're just going to sort of pop our head and then just break above. And I think that'll coincide with this VIX spike, with the yield spike, and with the markets will have to go down at that point. So it just looks like a lot of pieces are all falling into the same place. So I'm not going to bother going through all of the FXs because they're all translated into the DXY. So a bit of a base here and then move higher. The pound, I think that's a double top, etc., etc. But yeah, dollar sideways up, just like yields. Markets drifting lower. I do expect them to bounce when they hit their prior resistance acting as support. Let's look at commodities very quickly. Let's look at copper. Copper is trying to base. I think this has to move lower. I think today's candle is pretty. It's quite a rejection. We moved higher, but we closed really near the low of day, kind of below yesterday's open. I'm not going to say that's a very bearish engulfing candle because it's higher lows, but Yeah, it's not the biggest bounce, is it? So, and I do think, the dollar's going to go up. So maybe, and I said it before, I feel like copper needs to just not just go a little lower to test this sort of 3.95 resistance, but actually go lower and hit the ascending. So I think copper will go a little bit lower. Natural gas, look at that. It hit its head on this descending. This descending line now, for me, is very, very credible. I mean, we've hit it 1, 2, 3, 4, you could say 5, 6. This one, we won't count it, 7. It's multiple times. So I think as soon as you close above it, the next day is guaranteed to move higher, if I can say that. I just feel like this is a very, very nice technical pattern to trade. But anyway, I'm long my oil gas, I'm sorry, my gas stock. So I guess I'm already long. Oil, yeah, nice bounce from the absolute lows. I do really think that low 70s, very strong buying. So now we're just easily trading this channel, these two lines. Nothing else to say. It's in the middle of the range right now. So no real point in chasing it, but I think it will go higher. Gold and silver. Okay, so I really nailed this channel, the fact that it would test the ascending channel, the lower part here, and it really did do that. I can move this target now. What I thought would happen and what is happening so far is a sort of a sideways bounce touching 1880. And I did say maybe we'd go for 1900. But what I do think will happen, it's a shame I deleted this, but really, and you can see these wicks, these resistance, just so sort of saying, no, you will not close near the high of day. I just feel like we're going to try again and fail and then come back down here. And that will also coincide with the dollar going up, yields going up, and commodities going down along with the markets. And technically, gold had a crazy run, absolutely amazing. It's just, yeah, it's really surprised me. I think a lot of bulls are surprised. And then, we were expecting a bit of a drop. It just kept on going. But ultimately, these things come down. They're orderly. You don't want to see, even if you're bullish, you don't want to see something just spike up and stay up. It's not healthy. It just feels wrong. You need to have that back test, a healthy test, to prove that there really is support. I don't know. When I heard that when I started trading, I thought, yeah, whatever. What are you talking about? Of course, you want the price to just go up, but kind of the longer you stick at it, the more you realize it's better to have that healthy back test. I don't know, you gain a bit of patience and respect for the buyers and the sellers. But anyway, that aside, I do feel like, and these sort of wicks up here kind of prove it, this rejection of the moves higher into the 1880s, really. I feel like we're just going to move lower. And then we'll have a nice new base. We'll see what the rest of the markets do. But yeah, I do feel like gold will actually lose this ascending support. It's bounced off it very nice. It's testing the prior resistance and support, 1880, but it will flush it. Silver, yeah, similar. So, I thought it might drift a little higher, maybe test this. I guess you could say we've already done it. Basically sideways down. Will it move a little higher? Maybe maximum like this. I don't know if it will really go higher and then down with gold. Just one of those moves. I'll look at the miners now, and you can see very similar. I would say a little weaker. Yeah, what I think is going. This is why I still haven't added. I actually nibbled the smallest amount of First Majestic. It's not even worth mentioning because it was such a small amount. Otherwise, I haven't bought a single miner yet, despite this. I don't know, what is it, 10% drop from the high? Let's say from there to there. Yeah. 10% drop, and I haven't added yet. So that's rare for me. I like to nibble in and out every sort of 10%, sometimes even less, 5%, and I haven't touched it yet, despite sort of selling a lot of it and feeling a bit naked, like I don't have enough, but I still haven't bought any really. Why? Because I really do believe that this gold and silver move down will happen. I think GDX will basically test its ascending support here, if not lower, to be honest. I could easily see it. It depends. It depends how much gold and silver go down on what the markets are doing, the dollar, the yields. But I think at minimum, we'll be able to see a move here. Let's call it 29-ish on the GDX. and GDXJ. Thing is, GDXJ will move a lot more than the GDX. So this is why I like to do it live. If the GDX is going to go down 5% to test the ascending, that means the GDXJ is going to have to do at least the same thing, which takes us well below this ascending. It takes us to sort of this area, which is not really any major support. I mean, I could say, yeah, these two candles here, but I prefer it hit sort of 34. That would make a bit more sense. I don't know. I guess I would be, because I own stocks that are in the GDXJ or that trade alongside the GDXJ. I guess what I would do if the GDXJ is sort of hovering down here at low of day, I'd be watching the GDX. I'd be basing it on the GDX ascending support, as well as the dollar maybe finding resistance and yields finding resistance and the markets finding a bit of support. If I see that happening, I would buy my silver stocks, for example, or small gold stocks that are in the GDXJ or that track the GDXJ more than the GDX. So, I mean, even if you don't have an obvious line of support, and I don't think there is an obvious one around here. Maybe there's a 50 daily moving average or 200. I don't use those much, as you can tell. But there's always another indicator, another technical indicator, or another chart that can help. So yeah, I guess I would base any buying of it. I'd be basing the buying of my miners, whether they're seniors or juniors, on the GDX at that point. If we're going to go much lower, 5% lower than the GDX. Finally, I missed Bitcoin in my last video, so I'll cover it here. Bitcoin, it was outperforming for several weeks, maybe 2 weeks here. The day it sort of broke out of here, it really outperformed and kept going. Now it's following the markets. First thing I'm going to say, it's definitely following the markets a lot more anyway, if not sort of almost perfectly as it used to. I do think the market's going to come lower. I just feel like Bitcoin's a bit weak at the moment. And again, look at this kind of candle here following that Powell candle from yesterday. Quite the rejection. I'd say just watch out once you start to lose 22,000. I don't want to give it a precise number. I mean, obviously, if you lose 22,250, it's definitely going to go much lower. But even, I don't know, 22,500 once we're there. I don't know. I guess it depends on the markets, but I'm actually a little bearish now on Bitcoin because this is looking very toppy and it's had a bit of a move. I mean, I don't know where you want to count it from the breakout. At least 30% move. I think it's going to come back down to this range at least, which again coincides with the general theme, which is, to summarize in a nutshell, markets lower, but I'm not too adamant on that. For me, it's more dollar up, yields up, volatility up, those three. And what does that mean? Because I think those are the three markets that are going to drive the rest. So those three going up, the fear trades, yields, volatility, and dollar equals markets down, commodities down. That's simple. News aside. Anyway, I'll leave it there. That's what I see so far. I hope you find it useful. Good luck trading.